ready to chip into that $11.7 million fund balance in fiscal year 1920 to make some capital expenditures as well as cover some personnel expenses, primarily in the fire department.
And my last question, Mr. Penn, is after an audit is complete, is it legal to change numbers? And that goes back to my prior question that you didn't want to answer, but 2018, the numbers do not carry over the same. And if I even go back to 2017, those are even larger. So when numbers are different, there are red flags for me.
Well, as I said, this is more of a rounding issues, and I do apologize for making that one mistake, and that doesn't cause to make the change, the mapping issues to correct that one mismapping. And we did actually, before we actually distribute out to the audience, we do actually note that there are one changes, and I think Lorena and Chris already mentioned in the report. So basically, we did not actually change any numbers. It's only a reclassification from one line item to another restricted line item. So the net position has not changed. So therefore, it doesn't reflect a restatement on the reissuance on these financial statements.
So is it legal to change numbers after an audit is completed?
Well, I don't understand your questions. We are basically allowed to make those changes, and then also because of the date has not been changed, and as long as we are able to note that in the audience and pull back the report, and because we did not actually do additional audit procedures on any numbers, only a mismapping, so we are allowed to make that change.
All right.
Any further questions? Because we're at a little bit past 7 p.m. So,
Mayor, we do have a presentation from Lorena in terms of some of the items that were talked about by Ken, and then the plan for moving forward. I know it's a little bit after 7, but if we could get through that, I think that would conclude the presentation for the fiscal year 18-19 CAFR, Mayor.
do you have any estimate about, just for the public interest, the viewers that might be watching and people that might be on teleconference? Just want to let everybody know that we're continuing on with our study session, and it is recognizing that it is a little past 7, so we'll be starting our regular session later.
Correct. So Lorena, did you want to go ahead and start the presentation on your side?
Yes, if you could just confirm for me that Tiffany has the other PowerPoint presentation up.
It's up.
Okay, thank you. Good evening again, Mayor and Council. So I want to focus a little bit on some of the questions that you've had and some of the sections that are in the CAFRA that, while Ken went over a lot of detail of what's in there, there's a lot of items that are in there that are of value to the council, to city employees, to the public, that really give a lot more information than the audited numbers. So on the first slide, one of the things that I want to talk about is the general fund balance. The most notable measure of a city's financial health is the general fund balance. As presented in the basic financial statements, the city's general fund has a balance of $22.2 million as of June 30th, 2019. This balance is comprised of a number of categories. $21,026,000 of non-spendable, restricted, or committed sources. These include $7,606 in prepaid and other inventory, and prepaid is just postage that we keep loaded on our postage machines to be able to send out, whether it's water bills or code enforcement items, or mailings that, that we have to send out. 1.1 million in PEG fees or public access channel fees. 11,680,000 in Measure U fund balance. An additional 8,213,000, which is the 20% emergency reserve. 133,000 in assigned funds for continuing appropriations. So these are items that were already committed to and approved by council in the prior year that would carry forward to the next year. And then 1,085,000 in unassigned fund balance. So the true general fund balance is $22.2 million. 11.6 million of that is Measure U fund balance. The 20% reserve is 8.2 million, and it's important to note that we did have a surplus in revenues this year, which is what increased our unassigned fund balance to $1,085,000. Next slide, please. Since the city began collecting Measure U funds in April 2017, Measure U fund balance has been broken out from the general funds balance per council direction. Measure U is a general tax and therefore cannot be shown as an individual restricted portion of fund balance. And so note 11 on page 86 of the CAFR becomes critical in showing that picture beyond what an auditor's numbers show. Note 11 breaks down restricted fund balance further beyond what an auditor is required to show. An auditor is only required to show the total amount, the public access channel fees plus the Measure U fund balance. Next slide, please. For fiscal year 16-17, Measure U fund balance at the end of the year was $1,215,000, and this can be found on page 86 of the CAFR for that year under note 11. Then in fiscal year 17-18, Measure U fund balance increased to $6,960,000. Also can be found on page 85 of the CAFR under note 11 for that year. And in the most current CAFR, the one we're discussing tonight, shows our Measure U fund balance at $11,680,000 and can be found on page 86 of this CAFR under note 11. Next slide, please. This is a snapshot of our general fund balance history over the last 5 years. And it's broken down by fund balance category, non-spendable, the public access channel, and Measure U, which are both restricted, the 20% reserve, our continuing appropriations, and our unassigned fund balance. One of the things that's important to note here is that while our fund balance has increased from $16.9 million in 2015 to $22.2 million in 2019, our unassigned fund balance, that means funds that are not committed or restricted for another use, has decreased significantly. We started in we ended 2005 with $8.2 million in unassigned fund balance. In the next year, that decreased to $6,008,000. In 2017, we saw the biggest decrease to $1.8 million. 2019, we only had $256,000 in unassigned fund balance outside of the restricted funds. And then because of the surplus that we had in 2019, our unassigned fund balance increased slightly to $1,085,000. And if you'll recall, we had some delays with sales tax payments that had happened in the previous year in 2018. That is a lot of the reason why we see an increase in this unassigned fund balance, is that those delayed payments hit in fiscal year 2019 rather than hitting in 2018 when they truly should have come in.
So Lorena,
Next slide, please.
I'm going to stop you right
Yes.
there. Hold on one second. I really want the council and the community to focus in on that unassigned fund balance, because that's when we talked about our budget. That's the deficit spending that the city had been utilizing. So instead of cutting its services, it had been tapping into that unassigned fund balance, which is the fund balance above the 20% reserve. So you can see in 2015 it's at 8.2, and by 2018 it had declined to 256,000. So that's the dollar amount that you have above the 20%. So you can see that in just a few years there was a decline of the difference between about almost $8 million from 2015 to 2018. And so that's really relevant, because what you see now in 2019 is a fund balance that is the above the 20% of about $1.1 million. Now, Lorena will get into the need not to go into spending that immediately, but that really goes back to some of the future liabilities that we have moving forward, and those are the items that we need to consider when we talk about how we move forward. So that's really critical to understand the decline in fund balance from 2015 to 2018, and then in 2019 you see the unassigned fund balance, the fund balance above the 20% actually increase substantially. Thank you, Lorena.
Mm-hmm. Okay, in the next slide, it is important to note that the general fund did end the year with a surplus in revenues, as we just spoke about. This is something that hasn't happened in many years. However, based on the financial model that was presented to Council in January of 2020 and the current effects of the pandemic on the economy, prudence must be exercised when considering use of any unassigned fund balance. And one of the things that a CAFR won't show you, because it's just not part of what is audited, is the future liability that comes from CalPERS. So we had a presentation from CalPERS to finance directors across California, and they talked about their rate of return, and their rate of return came back a lot lower than they had initially projected. Now, all of their actuarial reports are 2 years delayed. That means that what happened this year, or what's happening this year, we won't see it on an actuarial for 2 years. We've already received our actuarial reports and our projections for next year, and I can tell you that just the unfunded liability portion of our annual contribution that we have to pay next year is going to increase about $500,000. Next slide, please. One of the things that the CAFR offers, and I'd like to take a little bit of time to talk about that before I talk about this slide, is the statistical section. The statistical section is a section that is not audited, and it's prepared by city staff, but it gives you a 10-year outlook on what happened, a 10-year history of what has happened, how our expenditures have changed over the last 10 years, how our revenues have changed over the last 10 years. And while it is by governmental activity, it's not separated by general funds and other funds. It does show a very good picture of how things have changed over the last 10 years. We also have in here a 10-year history of change in net position. We have a 10-year history of fund balances of our governmental funds, and the general fund is specifically stated on page 180 and 181. So you'll see that in 2010, our general fund had $2.5 million in fund balance. We had $2.3 million reserved and $209,000 in unspendable. Now, at that time, we weren't required to report fund balance the way it is now, but that doesn't change that our general fund only had $2.5 million. Where you see a big injection and a big increase in the general fund balance is in the year 2012, because that's the year that refuse sold. Then you start to see the balances declining and then starting to increase again after Measure U is collected. So that brings us to that ending general fund balance of $22.2 million. It also, without going into detail of every statistical report that's in here, it gives you information on debt. It gives you information on property values, property taxes, our assessed values, which is what our property tax income is based on. We have direct and overlapping debt for government. We have information of who our principal property taxpayers are, who our biggest employers are in the city, how many employees we have in the city, and that's not budgeted positions, that's actual employees that are on payroll on the day that the year ends, on June 30th of any of these given years. So it does show you how that's changed. It does show public safety in there and the numbers of sworn officers or sworn positions versus non-sworn and how that's changed over the last 10 years. It shows you what kinds of calls for services we've gotten, how many permits have been issued. So it really gives you a good look at everything that has happened in the city. I mean, it talks about how many trees we've trimmed, how many square feet of sidewalk has been poured, asphalt that's been removed and replaced, and all of that is listed in that statistical section. It does give you 10 years, like I said, so it is information that really does tell a good story about what is going on in the city, and it's, I think, critical for people to really look at that to understand things better. So going back to this presentation, what I did is I just took the most recent 5 years of our government expenditures, and I get asked a lot, how much are we spending in public safety? And just in the last 5 years, we show that in 2015 we spent $28.9 million in public safety. Then it decreased in 2016, but increased significantly in 2017. And this increase was not a result of Measure U. This increase happened really before Measure U hit the books, because we didn't start collecting Measure U revenues until April 1st. And if you recall, council approved like a kickstart program so that police and fire could start hiring in December of 2016. But all of that takes time, and this shows actual expenditures. So we were already increasing our costs before we started collecting Measure U. And then it continues to rise in 2018 and 2019 to our most recent year being $40.9 million in public safety costs. If you look at other categories like the library, parks, sanitation, you don't see as big of an increase, if any. There's a lot of categories that really didn't increase much, but it's important to look at this and see what has happened over the last 10 years. Next slide, please. For long-term liabilities, while short-term liabilities are considered current and payable within a year after the date of the financial statements, long-term liabilities are due after a year and are an important factor in the city's financial planning. The primary sources of long-term liabilities for the city, because we don't have a lot of debt, are pension costs, and OPEB costs. These costs remain a challenge for the city, and the effects of the global pandemic will only add to those challenges when we start getting those updated actuarial reports from PERS. And so this goes back to one of those findings where Ken was talking about that big negative balance that we have in our internal service funds. This has a lot to do with it because we have to show now on our books what our future liability is for pension and for OPEB. And so that shows a completely different picture than if we were just looking at it on a cash basis. And we'll have to start taking those items into account when we prepare the budget in future years. We're going to have to increase the contribution to those funds in order to offset these costs. Next slide, please. So again, implementation of GASB 68 for pensions and GASB 75 for OPEB liability has made a big difference. The employer is required to report their proportionate share of the net pension liability and the net OPEB liability on their financials, along with associated deferred inflows, deferred outflows, and pension and OPEB expense or revenues. These GASB pronouncements affect all city funds with staff assigned to it. Where it's different is that in internal service funds, we have departments such as IT, facilities maintenance, and vehicle maintenance that are funded by other departments who service them. All departments and funds serviced by these internal service funds will be required to make additional contributions to these internal service funds to cover the respective pension and OPEB costs. Next slide, please. So now I want to get into a little bit of the challenges that we encountered during the preparation of the fiscal year 18-19 CAFR. It's not been a secret that the finance department has had a lot of turnover in the last couple of years. We've had several vacancies, and with that, that means that we've had limited staffing to complete all the tasks that we have in a timely manner. We also now have a lot of new staff that requires additional training and assistance to complete tasks. In addition to that, we had an onset of the COVID-19 pandemic and the stay-at-home order that was implemented. City staff and the POON group staff were required to minimize the amount of time in their office. And the challenges with learning to cope with remote work sites only added to this. So I'll be the first to recognize that, yes, there were errors. Yes, we have a lot of room for opportunity and growth, but we're committed to that. The finance department is committed to making changes to ensure that things are completed in a timely manner so that our auditors aren't waiting for us and are getting the information that they need to complete their audit work. Next slide, please. After the final CAFR document was issued, 3 discrepancies were discovered. On page 19, under net position and restricted 4, public access channel and Measure U balances were incorrect. The fiscal year 2017-18 was inadvertently carried forward from Measure U, and the balance of restricted funds was placed under public access channel. The bottom of the page directs users to see notes to the basic financial statements. So this would take us to page 86 under Note 11, Fund Balances. This note provides the correct breakdown of fund balance restricted for public access channel and Measure U. The challenge comes in because of Measure U. Measure U is a general fund tax that normally, for auditing standards, is not separated. We've asked to separate it, and that is why it's in a note and not on the front side of these of the financial statements. But although the total for general fund restricted funds was correct, the breakdown was not. We have corrected this, And moving forward, we will make sure to double check this so that it does not happen again. Next slide, please. On page 9, under revenues, Measure U sales tax for 2018 was incorrectly stated at $7 million. The correct amount is $11.1 million. In this case as well, total revenues were correct, but the breakdown was not. That means that correcting the Measure U sales tax to $11.1 million decreases other taxes from the originally stated $29 million to the correctly stated $24.8 million. And while I understand that this is an error that should not happen, absolutely not, should not have happened, this is part of the MD&A, and the MD&A is not audited. The audited numbers, where this information comes from, did not change because this changed. Next slide, please. On page 91, under the original budgeted amounts, revenues were incorrectly stated to reflect the actual revenues collected as opposed to the original council-approved budget amounts for each of these revenue categories. Again, it's important to note that none of the discrepancies listed above changes the net position of the general fund or of the city as a whole. The Finance Department is working on checks and balances to ensure that these errors do not occur in the future. And I want to assure the council that errors like this will not happen. In the past, because of staffing shortages, we have not double-checked each other's work and done a lot of the cross-referencing that we need to do. But I commit to the council, I commit to our city manager that this will not happen anymore. We will make sure that every single page is double-checked by a second or third person if needed. We are currently working on implementing a policy to make sure that that happens. And our commitment to you, my commitment to you, is that when you get these presentations, they will be timely and they will be accurate. That is all I have for you. I'm open to answer any questions.
Thank you for that additional presentation, Lorena, and I would like to request that we get each council member get a copy of that PowerPoint presentation. Appreciate that.
Yes, we will get it out to you.
Okay. Council, questions of Lorena? Michael, none? Linda? Nothing? Okay. Thank you very much for that additional input, Lorena. And we understand certainly that there's an awful lot of number crunching that goes into all of this, and I appreciate some of the hardships that your department was working under, and I trust that your assurance will be something that you can uphold. Thank you again.
Absolutely.
And that concludes our study session.
Council.
So we will adjourn that study session. Let's take a 5-minute recess, and then we'll restart our regular meeting. Start our regular meeting.